Yes, you can make life-changing wealth in crypto even during a bear market. Now, this may not be the most glamorous route, but let me show you what happens when you get in around the bottom and you play the long game. If you would have invested $1,000 into Bitcoin back in March of 2020 when the price was close to $3,800 and held that position until the cycle top when Bitcoin broke 69,000, your $1,000 investment would have turned into 18 grand. March of 2020, Ethereum got as low as 86. That same 1,000 into Ethereum held until the cycle top, you would be looking at a decent 56 grand. Binance was $6.40. Repeat the steps and you would be looking at a cool $100,000 or more. Solana was 50 cents, guys. I think you see what I'm getting at here. Now that's the power of having a long-term perspective during a bear market. And you may be wondering which cycles that we are referring to, and more importantly, when does the next one start? Well, the cycles that we are talking about are the Bitcoin halving cycles. They occur about every 4 years, and often associated with this is major price movement, most likely towards a new all-time high. This is how we got the numbers that we used a moment ago. Time period spanning from March of 2020 to November of 2021. So we're looking at about 18 months. But here's the beautiful part about this, guys. The cycle is repeating. That is why we are seeing what we are seeing right now. The next stage in the cycle is the correction, which we are going through. And then after that is the recovery. But honestly, this recovery could take a few months. All the more reason we need to develop this long-term strategy, and we need to do it right now. In crypto, there are numerous ways to make money to secure your investment, but the most proven method would be something referred to as dollar cost averaging. Dollar cost averaging is a method in which you spread out your initial investment over a period of time. You do this to reduce the volatility of your investment and capitalize on the long-term growth of a particular asset. The trick is to maintain that $100 per month, and if you do, it could turn out like this. Using BNB as an example, let's say this month you invest $100 while BNB is at $400. In June, same $100, but the price of BNB has gone down a little bit, making your $100 a bit stronger. Now you get 0.4 of BNB, or roughly 35%. In July, BNB dips again. This time your $100 gets you 0.5 of a BNB. So after 3 months, you now have a full BNB token, and you only paid roughly 3/4 of the average price. Now we go into August. You're sitting at 1.1 BNB and the price begins to go up. Now don't get excited yet. Yes, we're in the green, but this mission is not over. After 4 months, you have more than one BNB token at the average yearly price of $400. Now at this point, you have essentially broken even. But here's where the magic happens. Let's just say September is an excellent month for BNB and it rips all the way up to $1,000. You've taken 400 and turned it into 12. And guess what? We still got 6 months left. Now, of course, we can't guarantee conditions like these, but they have happened before. And if we apply this strategy, this is the type of potential that we're talking about here. And we can apply this method to any asset of your choice. A smaller price asset such as XRP, Stellar Lumens, or HBAR, or even smaller than that. We're talking VeChain, Digibyte, VRA. The same thing goes for the amount of capital that we start with. $1,000, some people may not have that luxury yet. I want to tell you, that's okay. The goal of DCA, dollar cost averaging, is really to teach you discipline and to teach you how to manage what you can emotionally control. Okay, that's the one thing I'm going to tell you on this channel. Never invest more than what you can emotionally handle. That's the best advice, especially when you're looking to take a long-term position. Something I wish someone would have told me a couple years ago. So far, we have established the benefits of having a long-term strategy during the bear market, and we have established an understanding of what dollar cost averaging is and how powerful that can be. But now let's look into a tool that can supercharge all of the numbers that we just talked about. One of my favorite things about crypto, guys, is the fact that you can use your money to make more money. This is called staking. Staking is simply the act of enhancing the network by securing a certain amount of tokens. Staking rewards come from holding an asset on its blockchain, strengthening the network. In return, you can be rewarded for improving network resilience. Staking falls under the passive income crypto category and comes in a few different forms. You have node validation, borrowing and lending protocols, mining, yield farming, also known as DeFi. There are some disadvantages to staking as well as some major advantages. We'll go over some of the disadvantages first. One of those would be lockup periods. This is something I personally can't stand, but essentially when you get into certain staking positions, guys, you have to lock up your assets for a certain period of time. Sometimes it's 7 days, sometimes it's 14, others it's 30, others it's 6 to 9 months. But if the markets were to ever suddenly change direction, which they are prone to do, or an unforeseen event occurs, your funds are not accessible. That could be a problem for some people. In addition, you may have to deal with unfavorable rates, which are subject to change depending on market conditions. And the average current market rate right now is anywhere between 7 and 12%. But sometimes they go lower, like I said, depending on the protocol and the conditions of the market at the time. With some projects, they have extra incentives like airdrops. If you stake using some protocols, they will give you airdrops of free tokens. It happens a lot on the Tron network, but this is something too that helps you add to your position and build on your stack. Now, the only issue with this is that for us in the United States, we always have issues receiving airdrops or extra rewards because our tax system is flawed, but that's a different subject for a different video. Now, in addition to staking long term, you also have to be aware of your security long term. This is where products like hardware wallets come in, which also are starting to feature staking services as well. Of course, there are many products out there. Us personally on the channel, we go with SafePal. They're backed by Binance. But the importance of having a hardware wallet, no matter which brand you choose, is taking ownership of your private keys, guys. We are entering the era of self-custody, and hardware wallets are one of the best ways to do it. If you are interested in the SafePal, and let me show you what this thing looks like, but if you're interested in the SafePal, guys, you know the link will be down in the description. This one is the most cost-effective solution, sitting at about $50. Now, they got some top-notch wallet security, some air-gapped technology, and it's connected with the Binance Smart Chain. So that means that the number of tokens, the vast number of tokens that are on BSC are available on the SafePal. Again, 50 bucks, can't beat that, guys, especially when we take into account the amount of wealth we are looking to preserve here. Now, we have established the importance of having a long-term strategy. We have gone over the tips and the steps that I plan to take, but what happens if we combine everything that we just went over? Like I mentioned earlier, a number of assets are starting to allow staking services. This is giving us the opportunity to apply dollar cost averaging into a staking position. Not only do we capitalize on the long-term growth of the asset, but we can capitalize on increasing rewards. As we put more into the position, we'll get more of the staking rewards, guys. For example, one of the moves I plan on making is to get back into the KCS shares, or the KuCoin bonus program. In that program, guys, you can get a portion of daily trading activity just by holding 6 KuCoin or more. Now, when KuCoin was around $25, $30, that was a bit harder to do. But now we have seen that we are a lot closer to the $10 range. That's the reason why I mentioned that in the previous video. Another platform that I talk a lot about is Vault. They have an automated investing plan that allows you to take that $1,000 that we were using through this video, separate it, and then over time draw from that 1,000 and DCA automatically. But they have added another feature to this in the form of baskets. Okay, this gets interesting. With this automated investing plan, you can take your same $1,000 investment, but now you can invest it into up to 5 different assets at the same time. So it's essentially like you're building your own ETF in a sense. But I find that to be very fun, because if you're the type of investor like me that likes to stay diversified, that's the perfect tool for you. They also have pre-made baskets in case you don't know which assets you want to batch together yet. They have pre-made baskets focused on the metaverse, DeFi, payments, proof of work, proof of stake. It's a lot of colorful options, guys. Of course, you know, links will be down in the description. Feel free to check that out. Right now, they already have XRP, XLM, and Tezos. And then, of course, we know that tokens like Digibyte, HBAR, and Algorand are available for trade only. But I'm telling you, they're going to make the shift to interest bearing, and then we'll be able to add all of the ISO coins, including the Quant network, to a nice little investment basket. All the more reason why Vault is one of my favorite platforms in this space. So that's the game plan, guys. From now until the next halving, I plan to DCA into all of the Elite 8 positions, and with the market taking the turn that it just took, oh boy, that's another thing I want to mention. I was putting this video together throughout the week, and you know, we've had quite the tumultuous week. That makes all of the information, all the numbers and metrics that we ran in this video, it essentially makes them 3 times as powerful, because BNB is not $400. It's like 2 or 3. So just scale up, okay? That's the position that we are in. If you got into the market this year or sometime last year, I'm telling you, it's the perfect time to get into the market, guys. And with what I have given you in this video, I hope that it helps you along the way. That's all I got for you guys. The bear market, the ultimate bear market strategy, courtesy of DHN. I wanted to call it the crypto investor's guide to a bear market galaxy, but I felt like that was just going too far. It's going too far. But if you found value in all that, guys, hit the like, leave a comment, let us know how you feel. What would you apply to this strategy? And if you have some tips of your own, let's share it with the community. Let's do this thing together, guys. 2024, that's our date. That's our target. We're not worried about anything in between that. It'll be fun. It'll be a ride. We'll have ups and downs. But we got the goal in mind, guys. We got that end goal. So with all that being said, I want you to have a great day. Have a prosperous day. And most importantly, if that money is digital, so is the hustle. I will see y'all in the next video. I'm not going to ruin it. I'm not going to